right, welcome to the Airmere Roundtable. Today's the 8th of August, 2024, and that's a special time because it's just about a year ago that Amy Meissner had her first A14 Trade Alert Service official trade with her subscribers. And fast forward a year, here we are today, and Amy's going to give us an update of how it went and what kind of results she had and what she can look forward to in the future. So thanks, Amy. It's been a great year, and appreciate all that you do, and look forward to hearing how the A14's been.
Oh, thanks, Tom. I appreciate all that you do as well. So thanks for putting this together really quick. And before we get started, I just want to go through the disclaimer like we have to. Aramir Corporation and Amy Meissner are not broker-dealers. The webinars and seminars given by Aramir and Amy Meissner are for educational purposes only. Options involve risks and are not suitable for all investors. Past performance is not indicative of future results, and this presentation is for personal use only. What we're going to talk about today. So basically what we're doing here on this presentation is I'm just celebrating the first year of the A14 alert service. As you know, I've done a lot of alert services in the past with a lot of my different strategies, and the A14 has been one of the most successful strategies that people just absolutely love. I love it. And I started the alert service to send out trades every week about a year ago. Just like a year and like a week ago or something like that. So I wanted to kind of celebrate that first year of success for the service. And I also want to talk a little bit in this presentation about something else that might even be able to increase the profits for people that are trading this as well. So again, just want to welcome everyone for joining today. For those who don't know me, my name is Amy Meissner. And as I mentioned, we're going to explore a few things today in this presentation. One, I'm going to talk about the origins of the strategy, just kind of touch on that for people that don't know what it's about. We'll review the performance and how it went for the year. And as I mentioned, I wanted to do something a little extra. So I'm going to show how compounding can be used to increase the performance substantially. And as well, we are also going to hear from students who've benefited from this strategy and this approach. So with that, let's just get started. First, a little bit about me. I began trading stocks and options in the mid-90s, became a full-time options trader in 2006. That's about the time when I met Tom, I think 2005, when we both got to know each other at the through Sheridan. So it's been quite a while and a fun
Long
ride.
time.
And anyway, so during this time, I've developed a lot of different strategies that I like to trade. I tend to specialize in high probability, non-directional option strategies, so market neutral strategies. And my goal has always been to make income. So, weekly and monthly income, and make it on a consistent basis, regardless of what the market is doing, whether it's up, down, sideways, choppy, crazy like we've had the last week. I also don't like strategies. I don't like sitting in front of my computer all day, so I create strategies that don't require that. I've also done speaking engagements and presentations for quite a few different trading clubs and educational trading services throughout the years, and have many, different trade alert services and workshops and video courses that I've also created over the years. And now have my most current ones here at Aramir, but things like the A14, the HV7, the AIC22, the time zone, the nested iron condor, etc. So, so that's a little bit about me. So before I dive into the actual performance, I do want to touch on the strategy itself for those who aren't familiar with it yet. And the A14 strategy basically originated from my success in developing high probability market neutral strategies. As I mentioned, those are the types of things that I like to do that were consistent with delivering steady returns, and again, can weather ups and downs of the market or whatever the market kind of throws at it. The only thing was that these were primarily monthly income strategies. And this time I was looking to create something with the same successful attributes and that market neutral, stance, but that could be traded on a weekly basis. And so what happened with all of the additional expiration cycles that were becoming just as liquid as the monthly cycles, I was finally able to do that several years ago. So by increasing the frequency from 12 trades a year, because I was doing a monthly strategy, to now 52 trades a year, my goal was to achieve that, all of the things that I was getting from my monthly strategies, but a much more rapid account growth. I also want to keep things simple, as I do with all my strategies. I want to have something simple to implement and simple to manage, as with most of my other strategies. Do not want to sit in front of the computer all day. It's just something that I just don't like to do. So I like to spend my time outdoors as much as possible. I live here in Southern California, so we have some nice, enjoyable weather. So I'd like I'd rather do that than sit in front of the computer. Um, my journey, however, with the A14 strategy itself began in September of 2020, after what was, quite a bit of turbulence in the markets with the COVID crash and all that kind of stuff. And so what I began doing, though, was I began experimenting with a variety of different tactics, and doing them on a weekly basis. And what ended up happening was I was able to triple my account in 15 months. So from September 2020 to November 2021, in 15 months, I made a net profit of 229% with these market neutral strategies. And just to kind of show you what that looked like, I opened up an account over at Tasty Works, which is now called Tasty Trade. Here you can see my statement of September. I just threw in like about $32,447. You can see there. Over the next few months, I added a little bit of money, and I ended up with about 62,000. So you can see here I added about 29,000. I took out some withdrawals, and I also made some deposits, but I ended up adding another 29,000. I didn't want to think that I came from 32,000. I came from 62,000. So within a few months, I had about $62,000, and I began trading in September. And by the end of November of 2021, I ended up with about $204,545 in the account. So the account more than tripled. That was a net profit of $142,437, which was a 229% net profit over 15 months. And that's, when I say net profit, I mean like all commissions and fees and all that kind of stuff. I was trading this in the SPX. And that kind of equals out to about 183% annualized net return. Since that was over 15 months, over 12 months, it would have been about 183% annualized net return. And again, I shared when I first launched this, I was sharing my account statement. So you can kind of see there that I started out with that. I added some money, and then here's my balance at the end of that November 29, 2021 period. So basically, after that period, I was teaching lots of different strategies and so forth, but I really wanted to share what I had done with my students. The only thing was that I knew that my more nuanced trading and would be, a variety of different tactics I was using would kind of be difficult to follow. So what I went about doing was combining the best elements of those tactics that I had been using in order to develop a rules-based version that would be able to replicate the similar results that I was getting. As long as it was getting similar results, without big drawdowns and things like that, I wanted to create that with a clear entry, adjustment, and exit criteria. And that rule set became what is now called the A14 weekly option strategy. It's a high probability market neutral strategy. It's suitable for small or large accounts. It's easily scalable. I created it to have a very simple entry and adjustments that only need to be checked once a day. And I was able to create that short-term weekly trade. Even though volatility came down, I was still able to trade it weekly. So I was able to get that rapid growth that I had been looking for, and the consistent returns that I had been looking for. It's about an 80 to 90% win rate. So it's pretty fantastic. So just a chart of my trading in 2021 that just shows, that super fast growth that I was able to get by trading this every single week. So basically what happened then was I launched the A14 Strategy Workshop in December of 2021. And after receiving a ton of great, testimonials and praise for how effective it was and requests from students to learn more, I introduced an advanced workshop in June of 2023. And that was to explore the more complex tactics that I was using in my own trading. People wanted to know, like, well, are there other things I can do with this? Like, other decisions I could make. Um, and then in order to provide more ongoing support, just a couple months later, I launched the A14 Trade Alert service on July 30th, 2023. Of course, this allowed my students to kind of follow my trades weekly, and that's why we're here today. We just finished the first full year of that service. So, I'm here to kind of share the results of that. And so here's the first year of performance. Over the past year, I think the alert service has delivered pretty outstanding results, even with a very conservative trading stance. I was kind of trading these pretty conservatively. I didn't do any compounding, anything like that, but it still achieved that win rate of 80.8%. So I did 52 trades. As you can see here, 42 wins, 10 losses, got 80%, were 80.8% were winners, and it returned a net profit of 91.17% for the year. So pretty good results for non-compounding and just doing a very small trade every week in the alert service. But before we dive into the detailed comparison of compounding, I do want to talk about just the concept of compounding and how it can impact trading results. So with the non-compounding approach, which is what I did for this service, I just used the same number of contracts for each trade. I just had a capital allocation of $5,000 and I just put on a 2-lot every single week. I didn't increase it. I didn't care. I was making profits on the alert account. I just kept it the same, kept it really simple, easy for people to follow, whether they were paper trading or trading for real. It could be, increased. The contracts could be increased depending on whatever my students wanted to do with their own accounts. That was up to them. But even with that non-compounding approach, it still had some really great results. But with compounding, that involves using the profits from successful trades to increase the size of subsequent trades. So, anytime profits are made, I now have a little bit more money, a little more capital in the account that I could use for new trades. And I can determine, can I increase the contract size for those new trades based on what those previous profits were? So by reinvesting those earnings, the growth can really accelerate significantly, leading to exponential returns over time. And so, as you can see here, you can really get a significant increase in the results with compounding. Here's just a graph to kind of show you. The blue line here demonstrates just doing the same contract size every single week. Very nice, return for sure. But had I done compounding, it's, starts off a little slow and then it starts to accelerate and is able, to gain much, much more and much more rapidly account growth by using compounding. So what I want to show here is, had I done compounding, how would it have, done doing the same exact trades that I did in the alert service. So the results of the alert service, again, they were created without compounding, very conservative approach. But over that year, the non-compounded, I did 2 contracts or 2 lots every week, put on a new trade. I just used $5,000 capital for each trade. And I ended up after the year with $4,558 of net profit after commissions and fees and so forth, which was a 91% return, which is fantastic. However, if I use the same $5,000 for each trade and I used compounding, then I would have been able to increase my contract size as gains were made. Now, it's not exactly perfect because, as people that already trade the A14 know, each trade, depending on the setup, might have a little bit different margin that it uses and how much I use. Sometimes it's a little bit more, sometimes it's a little bit less. So it's not like I'm just constantly increasing my contract size, but I'm able to increase, the amount of capital that I'm using over time with the compounding method. And that's something that I actually show in the Advanced Concepts workshop. I actually have a calculator that I use for that. So basically with that, had I just used the same exact percentage of profit and, the P&L that I made in the actual trades that I traded in the alert service, but multiplied it by a different number of contracts depending on what the growth was, I could have ended up with net profits of $8,899 or 177% return. That's almost double what I would have yielded, what I yielded in just a same two contracts every single week. So it has, really illustrates just the power of compounding to enhance those returns and how it could have really boosted the annual performance significantly. So it's definitely something that I do in my own account. I'm sure a lot of my, traders out there do that with their own accounts as well. But I wanted to show that and, show how much of a difference it can make. It's very, very powerful. So I do want to show a few examples of the trade in action. As you know, we just had some really recent market turbulence, some pretty serious market turbulence actually. So I thought I'd start by showing you a trade that I entered in the service last week, and how it performed on Monday when we had that, we already had a big crash on Friday, but Monday we really had some significant drop in the market. So I thought that would be kind of fun to show you and then go through a couple other trades as well. So here was the trade setup that I sent out for Monday, for Friday, August 2nd. This was the trade setup. And the nice thing was that we had already had kind of a big downturn on Friday, August 2nd. But the higher volatility that kind of got popped up during that time actually allowed me to get a really great price and a really nice setup. So I thought this was a really nice setup. I had some pretty good room for both the upside and the downside, even outside of the tent. I put this on when the market was about 53.05, which is, I think, where it actually ended up today, close to it. Maybe it's a little bit higher today. But I had, some room to go to the upside or to the downside. So, pretty nice setup. I like that. However, on Monday, as you guys know, the market opened with a huge spike in volatility. I think the VIX went from 29 to a high of 64 that day. If I'm not wrong, Tom, so it's more than more than doubled.
It sounds about right. Yep.
Yeah. And the SPX, which is what I'm trading, actually gapped down 4%. Just, just like people were like, oh my God, what are we going to do? And we haven't seen that kind of volatility in a long time. It's really been quite a while since we've seen anything like that. But despite that, the A14 actually demonstrated some really good resilience, and it hit its profit target and beyond that as the market opened and throughout the morning. Now, it wasn't really straightforward, so keep in mind the prices were all over the place. I mean, the strikes that I had, bought and sold here actually had huge bid-ask spreads for what they normally would have, like maybe 30 cents or something like that, 30, 40 cents. We were talking like $5, $6, and sometimes they'd bump up even more than that, as, people were just kind of panicking. So it's not like, guaranteed that a good fill is going to happen in a market like that, because prices were bouncing from, showing that the trade was down to showing that the trade was up and everything in between, down 10%, 15%, up 20%, 30%, 40%. And like I said, everything in between. So again, it's not guaranteed that it's going to fill, but in this case, there were really enough people out there that were buying and selling those strikes, either, they had previous hedges on and they were taking profits and just saying, woohoo, I just made like, a ton of money on this strike. I'm going to take my profits. Or there were people out there also scrambling thinking, oh my God, the market's falling. I need to fix my deltas, or I'm panicking. Either way, they're kind of scrambling to purchase those strikes. And that really allowed for this particular position to get some really great fills. Now, the trade I had on in the service, in the alert service, ended up closing out at a 7.15% profit while we were down here. I mean, I think just about here when we were, I should say about at 51.68, 51.70, 51, 51.50, something like that. And that was, about I'd say 60 to 70 points below the break even of the tent in this case, right? So even with that, it was able to make a 7.15% profit, which is above the profit target. I usually go for 5% to be pretty conservative. But I was also getting lots of students that were reporting even better returns throughout that morning, throughout the day even. As a matter of fact, I did the class trade, but I also had contracts on, and later in the morning, I was able to get out for 9 and 10% profit. I probably could have gotten more if I was a little bit more patient. So it was really just this, great opportunity, even though the market was kind of in a bit of a free fall that morning. So things like that can happen, which is great. It's one of the reasons why I like broken wing butterflies as the main structure of this strategy as well. So now, of course, that particular down move was really quick, and we had that huge vol spike and everything. It had just the right circumstances for that great profit, but that's not always going to happen. Sometimes we get big downturns, but the market doesn't necessarily behave that way, and there isn't necessarily an opportunity to get filled in those circumstances. So I want to kind of show a couple of other examples of this trade and how it did in a maybe more typical down market, maybe moving a little bit slower. So in this particular, here's one that was made in 2021. I could have shown one that was like more recent, but it's the same type of, same strategy. So it's going to have the same type of reaction, I should say, most of the time. So in this particular case, let's see, we started this one on the 3rd of September. The market was at 45.32 at the time. And then, we dropped down about 60 points and, made some adjustments. But you can see here that the trade itself really was only down about 3.9%, even with that move. And that was just like, the following week. So that was about, maybe the following Wednesday or something like that. And then as we continued here, maybe it started stabilizing a little bit, started getting in some theta because it's, pretty fast theta trade. And then by the 14th, so, about 10, 11 days in the trade, getting close to winding this down, the market had dropped about 100 points since the trade entry. And at that time, with where the SPX was, that's about 2.5% or so. But still down, yes, but still under the tent, still theta positive, only down about 2.8%. Didn't need much at that point, and it did have a little bit of a bounce where I was able to exit the trade, in this case, a little bit lower than my profit target, but without wanting to take more risk, just take it off, as it was kind of winding down a little bit longer in the trade than normal for that one. And then sometimes, we also get, that was like more of a typical kind of down market, maybe, so to speak. But sometimes we get, markets where something that I thought that might happen even with this particular trade, where we get a big down move like we did, but then we have a complete reversal really, really quickly. And that's kind of what happened in this example. So started out again, nice and flat. Everything's looking good. 16th of July in this case. And like the following Monday, we had a 113 point down move. So in this case, that's a pretty big, that's almost 3%, considering where the market was. Not quite 3%, but maybe 2.75%, something like that. And, definitely had to do some adjusting. So it didn't give me the opportunity to get out with the profit like the example that just happened on Monday this week. But it still, was plenty, fine to make an adjustment. It wasn't down too much, in this case, about 5.2%. And then we had a complete reversal on the very next day. So the 19th to the 20th, pretty much a complete reversal. So my adjustments, yeah, they cost me some money. But again, the trade's not down very much, only about 2.2% in this case. And I think I was doing, I don't know, I was doing here maybe you know, 5 or 10 lot. I'm not sure. I only do 2 for the alert service. And then it went up another 76 points. So completely reversed from a pretty big down move to a really big up move, all in a very short amount of time. Well, of course it's short because these are just weekly trades anyway. But I wasn't able to make much. So it wasn't like very exciting, but I was able to get out of it with a small profit. So I just wanted to share that to kind of show that, you know, I'm not always going to, you know, I'm not saying that every time we get like a huge down move that the market's going to give you those good fills. But if, you know, just happened to be this Monday, just happened to have all the right pieces in place to be able to do that. And if it didn't, then I would have made an adjustment. Um, so, and then for people that are asking questions, I will talk about that afterwards. We usually like to answer all the questions after the presentation. This is kind of a short presentation, so I will answer questions. So I don't want anybody to think I'm ignoring them. So anyway, you know, that's one of the reasons I really love the strategy, and so do my students from what they're telling me. So I really wanted to share what they're saying about it. So I just thought I'd share some of these, you know, things that some testimonials I'm getting from students that have been trading this, either new students or people that have been trading it for since I started it. So here's from John R. He purchased several courses from you, and I'm refamiliarizing myself with the A14. Absolutely love it. Thanks again for all the help and insights. Thank you, John. Chris D says, just want to say thanks for publishing the A14 technique. More than worth the price. I have already made 30 times the cost of the class. I get a lot of those. From Keenan J, the trades you've taught have been performing very well, even in this crazy market. I can't stress how amazing the A14 strategy is. And from Bill B, he says, the trade is brilliant. I would highly recommend it. Thank you, Bill. He's in the alert service, and he's always there answering help, you know, talking with other students and so forth, which is fantastic. I love when people spend time communicating with each other. It really makes it a lot of fun. From Raphael M, it's amazing. The time that I put into this is really minimal. Year to date, I'm up $50,000. It's really amazing. From Matthew M, I had great success with the A14 this past year. From Lowell S, I just finished the A14 and HV7 recently and love them both. Thank you. John D says Amy's A14 strategy transformed my trading approach. The workshops are worth every penny. From Michael B, Amy's Trade Alert. And from Michael B, I think this is the last of the ones that I'll share right now. Amy's Trade Alerts provide real-time insights that are invaluable, a must-have for serious traders. So thanks for everyone for that. I just want to say, you know, thank you to all my students, actually. You know, your feedback has really been invaluable. And the success stories are really a testament to the strategy's effectiveness, I think. And of course, the positive impact it's had on so many of you is just really, really nice to hear. So here's a little of what's included with the alert service. There's a private Slack channel, and this allows for really fast web and mobile notifications. So it has a mobile app that you can put on your phones, whether you're using Google or phones or iPhones. It makes things super fast and really easy. And it also has, you know, you can, you know, do web, actually see the notifications on the web as well. So you have options for that. So we use a private Slack channel for this particular service. I do a new trade every week. And with that, I'll send out real-time alerts for the entry, adjustments, and the exit of every trade, as well as additional commentary and what my thoughts were and things like that. And then subscribers also gain access to a really supportive community. So you can share your insights and experiences with each other. And you can also ask questions to other students. You can ask me questions and things like that. So with that, I just want to let you know that we have some fantastic offers to celebrate this 1 year milestone. However, I do want to let you know for new people out there that have not been a part of the A14. In order to join the A14 Alert Service, you do need to be part of the A14 family by enrolling in one of the A14 workshops. This allows for you to really absorb, like, how the trade, how it works and so forth, so that when you come into the alert service, you guys can help each other out, and you'll get a lot more out of it that way. And right now we're offering some great special offers and huge bundle discounts that I think will make it really easier than ever to become part of the A14 trading community. So all you need to do if you're new to the A14 is simply go to aramir.com/summer. I don't know if Tom can put that in the chat, but here's the link right here. I guess I
Yeah, I
can.
can do that.
Okay, thanks, Tom. And for our existing A14 workshop students, so if you are an A14 workshop student, you already have a workshop or one or both of them, but you haven't joined the alert service, or you maybe were part of the alert service before and you want to come back, you can do so by, instead of going to that link, just go to your A14 workshop class page and you'll see a special link located there to sign up for the alerts for you that are already A14 workshop owners. So I hope to see some new faces in the Slack channel. So now let's go through any questions anybody has. I know this was kind of last minute, so there's not a lot of people on here live, but if there's any questions, we'll take a look. So I
You
see
see the
Kieran.
chat?
Yeah, I do
Yeah,
see the chat. So I don't know if I opened it up late. I just see a question from Kieran.
that's the
Um,
only one I see.
Okay. And anyway, he's asking, elaborate on how you increase during a gain and decrease lot size to achieve that compounded graph. Thanks. Yeah, so basically what I do is I'll determine an amount of planned capital that I want to allocate for my trades. So in the example for the alert service, let's go back. So the example for the alert service, I had a $5,000 capital allocation for my trades. So what I do is for a two lot, starting out with a two lot, I'll figure out, I know if I make some adjustments that I might have to increase my margin that I'm using, but I don't want to go over 5,000. Usually it's much less than that. For anybody who's in the alert service, you know that most of the time the trades are a lot less than 5,000. But what I'll do is I'll determine, based on the way the strategy works, is I will determine, okay, if I put on, let's say, a one lot and I have to do some adjustment, I will figure out, based on every week it's a different setup. It's not going to be exactly the same. So some setups cost a little bit more than others, and some have a little bit more margin than others, depending on what's going on in the market and the volatility and so forth. So what I'll do is I'll determine, okay, so for a single lot, let's say, I need X amount of dollars. It's going to cost me X amount of dollars in margin or max risk. Now, what if I have to put on an adjustment? So I'll choose the most common adjustment and add that to the top of it as if it needed it right away. I will total that amount, and then I will divide that into however much capital I want to use. So in this case, I start off with 5,000. So let's say it was, $2,500 or $3,000 or something like that. I know I can only do one lot. If it was, let's say it was only, most of the time it's less than that. So it was $1,500. So I would just take, 5,000 divided by 1,500. And it's telling me I can do three lots. And I just I will round it out. So if it says 3.33, I'm going to round, if it's 3.5 or more, I'll do 4. If it's 3.49 or less, I'll do 3, right? So I'll just kind of round up or round down depending on what the calculation comes out with. And that's going to tell me how many lots I can do. So then I'll, do that many. So let's say I make some profits and all of a sudden I've got, $5,200 in the account. And then the next one is costing me, let's say $1,620. So I can just take 5,200 divided by 1620. And now I've got 3.2. That's still 3 contracts. But as it goes, let's say I have like, let's say all of a sudden I've got $6,400 in the account. And the next trade is, let's say $1,580. So I would just take that, 6,400, divide it by, what did I say, 1,580, and that's 4 contracts. So now I'm doing 4 contracts. And let's say I have a little bit of a loss now, I'm at 6,200. Then I would just do the same thing. So it's just kind of going along like that. And because this is such a high win rate trade, usually, there's going to be some losses. As you can see here with the specs, I had out of 52 trades, I had 10 losses. But the average loss wasn't, hurting the trade too much. Over time, I was making much more than I was losing. And I think the max consecutive wins were 9 in a row. And the only time I had max consecutive losses of 2 was once. Most of the time, it's just like 1 here and 1 there. I did have one time where it was 2 in a row. So you can kind of see that's how that happens. And I actually, in the advanced workshop, I do include going over how I do the compounding. I have a compounding calculator in there and so forth, because it's more nuanced based and so forth, as opposed to the original workshop, which really just focuses on the actual rule set. If I'm just going to trade it by exact rule criteria. So let's see here. Hopefully that answers your question. Justin's saying, do you plan on placing an A14 trade tomorrow? Yes, I do. I have no doubt that I will place one tomorrow morning. I mean, unless the sky's falling or something like that, I will plan on doing that. So I hope really excited to see you there, Justin. That's great. And Tom, you can help him get access with Slack once he signs up. That'd be great. Kieran's asking, Kieran says, thanks, Amy and Tom, for great service. Already part of the service since inception. I did not realize this is a sales presentation. Thanks again. Yeah, I apologize, Kieran. But thanks for being here and asking questions. So Justin's saying, can we receive a text message notifying us of the trade alert? So the way this works is we used to use text messages. And what happened was they would go out as, I believe, as SMS. And a lot of times what would happen was, well, one thing, it was kind of a clunky service for me to use. Like, when I was typing in the messages, it wasn't very mobile friendly. So if I was out and I had to do an adjustment or something, it didn't really work very well. You couldn't talk with each other. And some people had service, depending on your phone service, some people were getting the alerts within 5 seconds or within 2 seconds, and other people were taking 10 minutes. So we decided to not do that anymore. Now we have the alert service on Slack. And so what that allows you to do is download the Slack app on your phone, and it works on all the different phones, and set up the notifications to automatically notifying you. And you will see, like, every time a message goes out, and also there's a channel where just the messages go out from me for the trades. And then there's a separate channel where you guys can talk amongst each other and ask me questions and things like that. And they are instantaneous. So there's no delay there. And it works great. And if you're not sitting on your phone and you're sitting on your computer, there's a web access on Slack as well. And there's instructions for how to do that when you sign up. And then Tom can help you if you have any other issues with that, making sure that you're signed up. You just have to have I believe, an email that automatically gets linked to the Slack, private Slack channel.
Yeah, it's pretty quick. I mean, literally it's cross-platform. So like you said, SMS, it also wasn't free, so it all depended on your phone service, and there were so many steps on the way, but Slack is direct, and it's like injecting stuff into your veins right away instead of swallowing it
Right.
and have your stomach absorb it. So
There's a good analogy. You're getting like, you're starting to sound like Dan Turk.
That was good, Tom. Real good.
yeah, thinking like Dan
Oh,
Harvey, doctor, right? So
oh, that was good. Right, right. Um, and then Rob saying, do your alerts come at specific times of the day? There are times where it could be like, let's say I'm exiting a trade. It could be at any time, because if I hit my target, I'm like, I want to be out, right? But for the most of the time, I'm entering trades in the morning. So within, like the first hour and a half or whatever in the morning. And I usually try to enter them around the same time so people kind of know what's happening. And then it's a strategy that for adjustments, I only check it once a day, and that's like in the last hour of the day. So it's really easy. That's why a lot of people love. It's kind of hard, I guess, for people that maybe live in time zones that are like completely out of whack with the US markets. But for most people, it's just really easy. You just kind of, okay, you got your morning, you got your afternoon. And then if something happens in the middle of the day, it's generally because not because I want to make an adjustment, it's because I want to take profits. So in those cases, again, it's really nice to have Slack because you can just have it on your phone and get a notification immediately. So cool. So hopefully I'll see some new faces. That would be really great. Oops, let me I think you put it in the thing, but I should have left.
I put it in the chat.
The chat. There we go. The actual for new students. There is the link to sign up. Yeah, I hope to see some new faces. It's always good to get some new faces. We've already gotten quite a few in the last couple of weeks. We've got quite a few people that part of that community. So the more people that join the community, the more help you guys give each other, and the more feedback I get. So if any changes or anything like that, I always take my students' information and feedback into consideration. So that would be great.
And one thing before you go too, you might want to talk about the HV7. We've had quite a few people jump on that sale price because this is the perfect environment for an HV7 trade.
Yeah, I thought we'd do like a quick little 5-minute thing, just me and you, but just real quick, for people that maybe don't know this, I have other strategies that I sell at Aramir, and one of them, the HV7, which you can also see at this aramir.summer/summer. Sorry, it'll show up there as a sale. Yes, Bill, this will be on YouTube.
Yep.
Is a strategy that's only meant for high volatility times. And as you know, we haven't had high volatility in a long time until the end of last week and the beginning of this week. And so I had 2 entry signals for that strategy. It's a signal, it's only entered on a signal. So I had a signal on Friday, I had a signal on Monday. I put on a trade for each of those signals. They were both out within the next trading day for their for their target profit. Could have got more than their target profit if I didn't do like a good till cancel order. And I just did, even a 1 lot trade for that actually would have paid for the workshop. So kind of it doesn't happen all the time, but it's a great strategy to have in your toolbox for when those times happen, as either like, just like an extra thing or just to, add to your trades that you're doing during those times.
Oh, and then
I got late
Liano
to the
asked,
meeting, but did you
yeah.
come? Yes, I did the A14 performance. I actually showed how it performed just this last week when we had that big downturn on Monday after putting a trade on Friday. So you can watch the YouTube video for that, Giuliano. But yeah, it hit its target profit and more. So that was a great trade. So I think that's it. I don't see any other questions. I know this was kind of like a last minute, so thanks for people that were able to hop on. We do have another question that came in from Greg. Let's see. In reality, the HV7 would be a good hedge plan? Question mark. Usually hedging requires constant hedging. It's not really meant as a hedge. It's just kind of a standalone trade. I suppose it could hedge. It's market neutral. So it's not really set up to hedge something that's gonna, make money in a downturn. But because of the way volatility works, it usually makes money in those certain situations. So when it's triggered, it usually makes money either because of a fade in the volatility shortly after, or also because it's such a high volatility market when it's put on, or not such a high, but it has a pretty big spike, that it actually, the setup is really reasonable. It's usually pretty inexpensive. You get a pretty wide range of profitable area for the market to kind of move around in. And if the market does have just a little bounce, even if it's just slight and you just get a little bit of that volatility fade, you can take a really quick profit. So it's kind of has more to do with that than hedging. Hopefully that makes sense. The
All right, I
adjustments that
think
I do
that's
in the
it.
other trades pretty much hedge things. So I think that's it. Yeah. So thanks everybody for joining. And for people that are watching this on YouTube, I hope to see some new faces. Like I said, it's a great time to join. We got some really great discounts and bundles and things like that that Tom puts together for us. So, all right, thanks,
Thanks,
Tom.
Amy.
Thanks everybody for
Thank you,
joining.
Amy. Thank you, Tom.
All right.
All
Thanks,
right,
Justin. See you guys.
see ya.